Now we're going to move on to our 6.8, 1115 item, which is consideration of presentation of deficit tax default land, sale letter and memo. That was A, and B, discussion of potential impacts to pending and future tax defaulted land sales. And we have our auditor controller, our tax collector, and our assessor here to present this item. And Ms. Harrington, will you be starting? Thank you.
Thank you, Board. I'm Genevieve Harrington here with my cohorts, as you mentioned. Just to bring this topic back up, I mean, we've been talking about it for quite a while now because my office has been dealing with the work that resulted in a series of things that have occurred over the years that resulted in a bunch of deficit sales happening in a very short period of time. And so, I mean, for a couple of years now, I could see that it was going to be something that we want to deal with as a county, I guess, and then and to come up with a plan, because I mean, going back to February of 2020, when my predecessor sat up here and presented on the deficit sales, letting you know that if we proceed, that exactly this will happen, that overdistribution and likely clawback, which is actually called a negative apportionment, that the potential for that was great. And so, so I do think that we've known this was happening, and so my office finally got to the end of all the work, all the calculations. We were able to see exactly what was collected, exactly what was not collected, what portion of that is covered by teeter, and what portion of that needed to be recovered. And so that's what we've been talking about for a couple months now. And the board had asked for a letter, which I did. I did my best to try to explain property tax, and there's a lot to it, but to summarize it and to identify the events that happened specifically in Lake County that led us here. So, not sure where to go from there. So I'm here, I have the letter, I have a plan. I know there's some questions, but I'm not sure exactly what they are, or, you know, what the best place to answer it is.
Patrick, do you want to?
I can probably provide some additional information. I'm joining in the presentation because this really does touch on tax sales and the tax defaulted sales that we've been doing. Part of the underlying issue here, what's leading to the necessity for the negative apportionment by the auditor's office, is related to direct charges. And that's something that I really want to highlight, that out of the tax sale, the piece that we're speaking about is not the underlying 1% tax. That is what is teetered here in Lake County. There are other counties that do teeter direct charges, but we never did that. So essentially, when we set up a tax sale, the way our software works is that upon completion of the sale, it shows that the property was redeemed if there was a bidder. But the amount of taxes owed can vastly exceed the actual sale price. So for instance, we have properties that are, you know, practically unsellable, or they're valued at let's say $1,000, or that's what they sell for. We have to drop the bid down. There could be $20,000 worth of debt associated with that property, of which, you know, the vast majority of it often are direct charges with penalties and interest. This is especially true, you'll see, where there are abatement liens, where there will be an abatement lien on a property that's only worth a few $1,000s because an agency had to go in and clean it up. But really, at an auction, we're not going to get a $10,000 bid, let's say, if that was the cost of the lien. We're lucky to get $800 or a few $1,000s. So where we see these deficit sales from my office is most prevalent in the low value lots. Just because it's the ones that have the most difficulty selling at auction, that require us to drop that price down. They're the ones that are upside down. So we drop the price down, that becomes a deficit sale. Because we get a successful bidder. But the software we have isn't really able to understand the concept of the deficit sale. If you recall, we're sort of an unusual county. We're one of the last 7 or so that don't have a low value ordinance. So it's, our issue is somewhat unique. We have a really large amount of properties in the tax defaulted inventory. That's why we're doing those 1,000 property a year sales. So while other counties may have a few deficit sales to deal with, they're able to address it differently because the auditor's office has to go in and do these manual revisions. And if that manual revision isn't done before an apportionment, that system wants to push that money out to the affected agencies. So I just want to explain, I think it's really important to understand that while we have talked about teeter, while teeter is somewhat adjacent to this, these are not teeter.
It's not, just to add to that, that it's not the teeter codes that is guiding what we're doing right now. I maybe shouldn't have brought up teeter as much as I did, but the teeter is relevant because it is what drives us to pay the agencies before we've actually collected. So that mechanism is in place. And then it also is, just as far as repayment, it seemed the most opportune time because cash flow is not an issue when teeter distributions are happening. But that is the only relation to teeter. It's not the teeter program or the teeter codes that are guiding the negative appropriation that we're doing or that we're bringing forward.
There are just a few other points I wanted to touch on beyond that. So anyways, it's the coding of our software that's trying to push this through. We're basically having to work to defeat the very nature of our system here because we're just not structured like a normal county because we are collecting on everything. What I would say too, just the way it works in the rest of the system when there are state audits, that audit has a 5-year look back period. You get the findings a year or two later. The state makes the counties reach back all the way to the beginning. And if there was an underapportionment and overapportionment, if there's any kind of issue, the state auditor forces you to correct it. And they authorize 3-year repayment plans. I think you can go up to 5 with permission from state controller or auditor. I don't know. But I mean, so the 3-year repayment plan that was being proposed is sort of grounded in, that's the same way if this were addressed in an audit that you would deal with it. And just finally, for everything else, at least from our office's perspective, every case we know of, this is how it, the way that the auditor's office is approaching it is the structure that we see where, if a county has made an error, if the distribution has been over or under what it should have been, they have been required to go back to the beginning in order to correct it. Whether it's positive or negative for the other agencies. So I just wanted to get out there in the beginning here that, what's happening here is the normal process. I think what isn't normal, unfortunately, is the nature of our system, that we have this massive inventory of low value lots. So, I mean, it is really, I feel for agencies that are seeing this large number change because it's the scale. Right. Other agencies are not experiencing that volume. So.
Oh, sorry. Yeah, just the sheer nature of 257 deficits within a few years. I guess that's just a very, very unusual or has never happened before. So. And I just guess I do think it's important to note that ordinarily the tax collector would not bring all the deficits at once. They would be brought, some would be brought in with regular sales, but because of the nature of litigation and the other agreements that or mandates that have been put on the tax collector, we've been forced to bring all of them when we would not normally have done it this way.
So Rich Ford, Assessor Recorded. So I'm here kind of for.
I think you're on.
You guys know how much I love microphones, so I'm here for support, but also to kind of chime in on a couple concepts. We've all had it where our bank pays too much into our account, right? Like I'm an outside controller, right? I know, never really. It's usually not a lot, but usually it happens occasionally, right? And there's no rule or law. Like before I showed up here, I was an outside controller, Fortune 500 company, all that. There's no rule or law that ever says that you cannot go back and go get that. And so, you generally, the best thing is go back to the bank and give them back the whatever money they gave you, right? And it's the same concept here. I also wanted to allude a little bit to what Patrick said is there's 33, 35 counties out of the 58 that are under our property tax system, which is megabyte. And if all of those counties didn't have low value ordinance, which most of them do, this fix in the system more than likely would have already happened, right? Because there would have been a big uproar to get that fixed. They've brought it to megabyte to get it done, and we'll see how long that takes. But there's not a big push because a lot of them has low value ordinance, which then kind of shields the mechanics of this kind of process. So it's kind of just all of this, like Patrick and Genevieve said, this is normal course of business, not just for government. This is normal course of business for outside when you're dealing with finances in accounting, right? And so this is not unusual. It is a little unusual that you allow them a couple of years to pay you back. That would be the unusual part that I would see outside versus inside. But, recognizing that that's what's going on with the system. So just wanted to kind of chime in there is that's pretty normal course of business. The other thing I wanted to open up a concept to is, from what I know, and I used to be the assistant auditor controller in Genevieve's office, not under Genevieve, but under Kathy, there's the concept of gift to government funds. Like, I don't know that you technically cannot glean it back. And that's probably why the state controller, when they come and audit us, they force us to go back and make sure that that is made whole. Because whatever is recognized, we can't, just because it's an outside agency that happens to be another government agency, we can't gift it to them any more than you could gift it to anyone else, or at least that's my understanding of the concept. So, and Boyd could probably chime in on that a little bit further than me, but that's what I've always understood it to be. And so I just wanted to make sure that that was kind of understood a little bit. So that's it for me. I'll turn off my mic.
Just to add to that, the couple of years repayment, and so it is not normal. Normally, we would just have to recover it all, but because that's why I wanted to propose the multi-year repayment, because it took us multi-years to get through this, to figure it all out. It seemed the right thing to do, and so that's why I brought it to the board's attention, and why I wanted it to be a county discussion, so that nobody was surprised. We haven't done anything yet. We've been talking and calculating and talking and calculating, and so we're preparing to do something, but nothing's actually been done other than calculations.
All right, I'm not sure who is Ben or Supervisor Crandall.
I don't know if you mentioned it, but the balance of the tax losses reserve fund, do you have the current balance of that as of now? Can we state that?
The teeter, the tax loss.
Yeah.
I don't have it on me. I know we try to. I would to estimate it, say about between 8 and 9 million.
Has there been any contributions to penalties and interest over the last 10 years or so? Or, just in general?
So what I can say about that is at the end of the year, excess is often transferred to the general fund, but there's been no excess in my time because of the deficit sales that I basically came into it. So, but I do know in the past, so there's a calculation for the tax loss reserve, I think 85% or so. We try to make sure we have enough to backfill the county's tax portion for a year if anything were to happen. So that's the guide that we stick to. So I don't know how to answer the penalties and interest being added, because that flows in and out. But as far as what we keep in the tax loss reserve, that's the guide.
Do you know of any other counties that absorb the deficit, potentially here? Or?
Well, what I can say is we are absorbing the 1%. So any portion of the sale where it's sold for less than what the 1% was, that's being covered. The only thing is when additional charges were being added. So the 1% base tax, we're not, the tax loss reserve is absorbing that. It is only the add-ons, the direct charges. And the bill could be $5 and an agency can add $1,000, $10,000. You could turn a $5 bill into a $15,000 bill. And so it's only those excess charges that are not teetered. And if we did pay them inadvertently when it wasn't collected, that's the piece that we're recovering.
That's kind of where I'm going with my question. Are there other counties that absorb the same way? Did you look into that? Or?
When you establish your teeter fund, if you decide as a county that you are going to teeter your directs, then yes. And so this county, in the resolution from 1996, we do not teeter the direct charges. And that's common too. So I believe I haven't gone out and polled, but I feel like you see a lot of examples of both.
So in 96, we decided not to do that,
We established teeter, and we decided we were not, that our county did not direct,
but we could. We have the discretion to do that.
Yeah, I don't know if you have the fund, I mean, you probably have to find the budget to do so, because again, you have to be, well, yeah, that would be a whole separate discussion, but yes, the county does have the option to choose to do that.
Can I chime in a second here?
Yes.
Just to give a little accounting background is, you have gap accounting and you have a matching principle. So the fact that you only collect for the 1%, you can only pay out the 1%. Otherwise, you'd kind of violate the matching principle of the gap, generally accepted accounting principles. And that's pretty much what she's describing is she can't magically start taking direct charges because she's only collected for one nature of funds in teeter, right? So she can only take that because she would violate gap accounting doing it. And so she can't do that unless you guys change the nature of that with her, working with her. And then from that point on, you could probably do something about it. But the current funds that are in there have one nature. The nature is, the actual property tax valuation.
So something else that I was going to add on to that too is that I am familiar with some counties that do teeter their direct charges. There's a large element of risk, and I think it's related to what you're seeing here. So just for everyone's benefit, the benefit of the bargain with doing teeter is that the county is smoothing out the revenue for the districts. Every year, the auditor's office is pushing that tax revenue out, regardless of whether people pay. So every, city, fire district, everybody is getting that 1%, even if no one ever paid their bill, and the county eats that. The trade-off, the reason counties were encouraged to do it, and the reason when counties weighed whether or not to do the plan, that they went forward with it, was that you get to keep the penalties and interest. So the county eats all that risk, and they're supposed to recover an auction. The problem we have here is a systemic one. We, unlike the other counties, issue a tax bill on everything. So we do issue like a $5 tax bill where there's a $50, fire district fee, where there's a $10,000 abatement. Because we don't have a low value ordinance like everyone else, we're way out of whack. We're not like the other ones. So I just think it's interesting because it's so many different points in this. We try to talk to other counties and kind of what you're getting at, but we are structured so differently. It's really hard to compare us. And I just wanted to throw that out there.
And I guess I just want to, as we're thinking about this, just there are situations where if some agencies, if they know that the direct charges are going to be teetered, sometimes charges are added. Sometimes the tax bill can be taken advantage of. And so sometimes charges are added that are just far above the amount of the bill, and then the person can't pay the bill, and then their property is going to be auctioned. So there are negative impacts to teetering the directs as well. So it's just something to think about, because you want to be careful about what is added to a tax bill. I mean, it's not something you can put on a payment plan. It's very as far as the due dates and so forth. So again, making sure that the tax bill is.
But we're asking them to be on a payment plan for.
Well, so when I say so you don't get to. When we make the tax bills, when we're adding so many charges to where the person can't pay, they're kind of stuck. You can't say, you know what, I'll just make you installments. I'll pay for you. You can't do that with a tax bill. There are some very severe revenue and taxation codes that guide the billing process. So it is just something to be mindful of, because when if you are a county that teeters directs, there's really, it's just motivating for other agencies to add more and more charges onto the tax bill. So I do encourage you to talk to some other counties who teeter directs just to get some more information.
We do allow payment plans in circumstances where the bill is not defaulted. So there are payment plans.
Thanks, Pat. Touche.
Sorry. I shouldn't say, but not, yes, so there are payment plans, but it's a 20% down. It's a very strict payment plan. So what some don't realize is that you can't just negotiate with with a property tax or with a property owner, that it's a very strict payment plan.
I'd feel more comfortable if we had the ordinance in place before I made this decision, but that's just me.
For what?
The low value tax ordinance,
Oh, to make what decision?
this one.
Which,
Are you asking us to bring it back up?
I'm just, I would feel more comfortable if we had one, because it's what you mentioned, that
Oh, I
other
would
counties.
too. I would too, because we just, want the problem to stop perpetuating.
Right,
We've done
right.
a lot of work, we're trying to fix it, but I would like to see the low value ordinance in place as well. But just so that we're clear, Revenue and Taxation Code says I need to recover this money. So we aren't really deciding if we're taking it or not. I have to move forward. Unless somebody else has another government code that supersedes RNT 4707 to 4711, I have to move forward with it. So we're noticing everybody. We have the plan. We were planning to start July 1st, 26 with the next teeter distribution in this upcoming year. But it's not really something, I do not have the authority to say no. I can put it.
Sorry, there's no action, so I'll stop.
Supervisor Sabatier?
Thank you for bringing this back, and I'm glad that it was pushed from last week. I think it gets confusing, especially this conversation that we've just engaged in, because now we're talking teeter and direct charges out of teeter, when really we should really split that apart and not confuse about where we are today. And I mean, I think part of the confusion is there's good intentions behind the comments, but sometimes it gets misconstrued. I'm reading right here of a note for Lake County Fire Protection. This is the total teeter distribution for Lake County Fire Protection, where the $103,000 will be withheld to mitigate budgetary impact. I don't think that's the correct statement. I know you and I spoke. The concept is, upon paying teeter, there will be a parallel track of getting back these direct charges. And so we are not going to reduce anyone's property tax apportionment, or whatever you want to call that.
Right.
Correct. That will be whole. The direct charges will be a separate path, but at the same timeline of when it is that they're going to be requested or reduced from some other payment. For example, if they're getting direct charges, it could be reduced from the direct charges they're going to be receiving. Again, every agency is going to be different, because some people don't receive anything. It's kind of sporadic. It may just be a lien. I'm guessing maybe special districts through a lien. I don't know that they have direct charges. We pay the bills. That's a different situation. And so I think each one's going to have a separate process. Now, I know that, I think that's step one, is teeters, like, just, it should be as far away from this conversation, because I think it's confused me and it's confused a lot of other people as well. The fact of the matter is, and actually, I got one more question before I get to that. So we gave away $2.138 million that we are asking back from all of these agencies. That is the total amount that's at the bottom of this spreadsheet. Where did that money come from that we gave them?
The teeter fund?
So we paid direct charges with teeter?
Essentially, once, go ahead and.
I was just going to say, in this particular scenario, if you're asking where the erroneous payment came out of, what fund it was credited from, it was teeter that it was literally credited for. Yeah, because that's the way it was coded with the county software. I mean, so if it helps, it could just as easily have come out of another fund. It's just that it happened to be paid out of that account.
Because that was the appropriate place to recover the 1%. So we bring the teeter in to cover it, and then it's like, oh, wait, only a portion of this is supposed to be covered by teeter. Here is the remaining portion that is not. And so because it's, yeah.
I don't like that answer, and I hope we can find a way to not do that again. Because teeter's supposed to cover a certain thing. So if we're covering somebody for, let's just say, $500,000 because we didn't do our apportionment, we think they're owed $500,000, we give it away. Well, that hits the teeter, which is supposed to support every single taxing agency to make sure it stays whole, but gets interest and everything else. So I'm
This is all in one bill.
going to pause right there,
Right.
but
So just so we're clear, it's all the 1%, the part that is and isn't, it's all in one bill. It's all.
until we're asking for it back.
Yes.
And then this is where I'm gonna get to the part that you and I spoke about that you may not be a popular fan of. So the $2.1 million, if we are simultaneously saying tax sales done, apportionment and calculations are done. Here's what you are owed. We're done. We would already have the $2.1 million in our pockets because we wouldn't be asking for it back, and nobody would know the better because that's the process that needs to happen. Here, there's a 2 to 3 year delay because we're looking at tax sale 160 to 162. So it's been 3 years at the very least. And now we're having this conversation about 2.1. I think the teeter should be for the 1% only. I do not think it's a good idea or the potential that direct charges are taking from teeter, even though teeter is not meant for direct charges. That's very confusing and concerning. We have to get to the smallest of timelines between when the tax sale is done, if we do a deficit sale, to when the apportionment goes out. Because whether it's a public agency or not, I really don't care. It's a business. And if you receive money and you implement that into your budget and it's 2-3 years later, you don't have potentially that money if you've gotten hit by the economy, if you've gotten hit by an emergency. There's a lot of issues that comes out of that. So in my opinion, and this is not on any individual here, we are inheriting a problem. Let me just say that before. It's not about the individuals that are in front of me here. This is an inherited problem where we decided not to do something, where 1 in 4 property in the city of Clear Lake was tax defaulted and nobody was doing any tax sales. So the results, unfortunately, are now that we're being requested to do 1,000 because people allowed not to do anything and just allow a city to deteriorate, which is not fair and not appropriate for that community. We pay dividends for the past. Okay, we're haunted by the past. We have to deal with this. But we have to figure out a way to reduce and minimize that timeline so we never have to ask for money back, or as small of a timeline as possible with a fine print of please hold this for 6 months. We may be changing the formula and figuring out that you owe us something, but if we don't communicate and they don't know, they're going to spend their money. And about $825,000 of the $2.1 million is in District 2. It is one of the poorest districts in the entire county. You go to Lakeport, they're barely touching $10,000 worth of stuff because there's no tax defaulted properties. So the areas that are screwed by tax defaulted are the same ones that are having to deal with this. So I've looked at all the rules and regulations that have been sent by our attorney, that's been sent by the city of Clear Lake. I don't see anything that says we can't recoup it. I'm glad we're recouping with some years in there rather than all at once. But to me, the future is so much more important on how we don't do this ever again. And I hope that you can bring us back some options, because I know Megabyte is part of the problem, and I'd rather not spend $10 million for a new software that can do what we need to do just for this. What can we do to help minimize that timeline? Because it is not fair to the people that are going to speak. And then we have this, which is kind of an uncomfortable situation where it's not really right to say you can keep the money. It's not really wrong to say you can keep the money, but at the same time, like, this should have never happened in the first place. We've inherited a problem, and we can't allow it to continue just because it is what it is. It does not mean we can't make change to it. And so I am urging us to bring back some options to resolve the software glitch that we have that creates this situation and minimize that timeline. And I'll stop there. And it's unfortunate, but I think we need to enhance our communication by letting them know that this may have a clawback and maybe put a timeline on that. But we need to set ourselves at a higher level in order to make sure that our partnership with these agencies that provide water, that provide healthcare, that provide education, do not get the same impact that we're seeing today. And I'll leave it there.
Just if I could address a couple of points. I do want to just mention that the other option would have been to not distribute the actual the good money. And so yes, we would like to know on the front end how much is 1% and how much is direct, but that is, it takes a few hours to calculate each one. And so that is something that we didn't know ahead of time, and we would have had to hold the actual collection, the actual distribution until the end. And so we 100% don't want to relive that, and we do want it to be better. But I also need to know, are we looking at a wholesale fix? I mean, am I supposed to prepare myself for 200 and some odd deficits? Because that is a lot of staff time that I don't have. Like, we're not staffed for this work. We've been trying to absorb it, hoping that the county is coming up with a resolution to fix this going forward so that we don't need to prepare for constant deficits. And so, I guess I just wanted to add that. And so, yes, we absolutely want to be more efficient. We never want this to happen again. But I also hope that the county is going to take some action to make sure that we don't have this situation again, where we have this unprecedented situation of 257 deficit sales in a short period of time.
And I just want to respond. We found a way to reduce in our last conversation where we killed the low value ordinance because there is a potential short term, we didn't say it's the long term, but a short term solution. We continue having the conversations with the agencies that want to work with us in order to resolve the low value property stuff. And in the long run, there's going to be some that fall through the cracks because it's impossible to build. Those properties will exist. But currently, those are viable opportunities for economic development, and to have a low value ordinance would kill it. I'll leave it at that. That will reduce the future as long as we stick to the plan that we said that we would go with. And I don't see anything that has suggested that we're going to deviate from that path, or else we should have done the low value ordinance. Like, it wasn't meant as a delay tactic. It was meant as a solution to the problem, which cascades into what we're talking about today.
Supervisor Crandall?
Yeah, just quickly, is there a way we can, like, in case, however this goes, when you come back and when we move forward, is there a way we can do like a joint letter to, like, just let the state know and ask for relief for legacy deficits caused by these circumstances, possibly? Like a letter with the districts and a letter with the cities, something like that to the state, or whoever's specifying this to us according to the code.
And what are we at? What would be the
Just the fact that we would like to basically absorb this as a sense of relief, because we have some of these districts. I'll speak to the fire districts. There's always a situation where they're underfunded, so I don't see a problem with absorbing it when it comes to that. I'm just asking for this to see if there's an option to do that. I don't know, in the future, or if there's something we can look at like that.
One thing that I can say is that I don't know, in direct reference to the relief you're asking for, I'm not 100% sure, but at the state level, when legislation was raised, for instance, by my office about offering additional options, there really wasn't any buy-in about, and this is about tax sales in general, providing more discretion, like giving us the ability to deal with the fact that we have this weird, unique situation. Statewide, the other counties were against it because no one else is really living our issue. So I think if you're asking for a particular relief, I mean, I know it's come up in other contexts, like that some of this land could be converted to parks or other thing. And if you're looking for state money to do that, or if you're looking for state money or additional options in any way, that would probably have to be a county specific bill that you would bring through your legislators. Because I can just say, in my experience at the state level, no one is interested in our situation because we stand alone. So I just wanted to share that. And just one other piece to address the point that was made earlier. We did bring that fix back, but obviously when we came up with that fix of not needing the low value ordinance and doing the bill cancellation or discharge process, that was before some of the points that have been raised now are in existence. So for instance, like a theory that an error can't be corrected in this circumstance. If that situation were to be the case, then everything we just talked about is not necessarily in play anymore. This would be an entirely new situation in terms of the property tax framework in California. So yeah, like at this moment, I don't see a reason why that can't continue. But some of the points that have been raised would really call that into question. That is an entirely different environment than what we just talked about.
Yeah, and then it's going to be kind of like we talked about earlier. It's going to be our fiduciary duty to then bring it right back to you at that point. So we're kind of, you can tell by the low value plus what we're talking about here is some of these things are interconnected and some of these things box ourselves in as we don't make the one decision. We're boxing ourselves into another financial decision because we either have state controllers rules or we've got property tax rules or we got generally accepted accounting principles, government accounting standards rules, all these different rules that box us in already to do certain things. So each decision you guys make will send us down a different path.
Okay, are we ready to hear from the public? Yes, I'm going to go ahead and open this to the public. You come forward and state your name. Whoever's first, state your name for the record, please, and you'll have 3 minutes.
Hello, my name is Frank Costner. I'm the General Manager of Conocta County Water District. Thank you, Chair, Supervisors, for having me here today. So Conocta County Water District, we're a water district in the city of Clear Lake. We're going to be severely impacted by this. It's $95,000 that we're going to have to pay back. We do a 5-year budget, and so we do our rates are in a 5-year period, so we can't raise rates again for another 5 years. And so, this is going to be a big impact for the district. Also, we count on that money, and it's usually pretty stable. We get about $30,000 to $60,000 every year, and so, this is going to be $95,000 over 3 years. $31,000 a year is going to really impact us. And so, one of the questions I have is, it's very confusing. You guys have been talking about it for a while. It's confusing as heck to me. And so how could we, one of the questions I have, and I know you guys really, there's going to be lots of questions, is how can we be sure that that's correct? We're not, no offense, but it's very confusing, and it's just, another thing I really, is why wasn't the district informed sooner? It seems like this is something you guys have been talking about for a little bit, and it would have been appropriate, I think, for the district, for my district to, be able to, I know you guys do your agendas and whatnot, but just, since it's something that really impacts us, it would be really good for us to be informed so we could be and I thought that the payments were going to be spread out to 2 years. One of my questions is, could, and you were talking about that, could it be spread out longer? And how could we be sure that this is not going to happen again? It would have been really good that if we knew about it, something was going to happen, 3 or 4 years ago, tax collector was saying, hey, this could be an issue. It sure would have been nice to have that calculation done. What it is now. So it's a concern to me that it would have been good. And then moving forward, and this was answered, can we get the software to calculate the tax loss? So when we're selling the deficit properties, that's calculated in there. And then my last question is, are the deficit sales back to normal? Is this something we're going to be experiencing now into the future, or can we really count on that money? And so it's really good to put a name to the faces on everybody. Thank you.
Thank you. Next person.
Hello, my name is California Howland. I'm with the Cobb Area County Water District. And after hearing some of the numbers today, ours is much, much less, but still the concern for paying it back. And the panel earlier mentioned revenue and taxation code. And I'd like to reference section 55222.2, where it says, claim limitation period overpayments from levies or liens. A refund of an overpayment of any fee, penalty, or interest collected by the board by means of levy through the use of liens or by other enforcement procedures shall be approved if a claim for a refund is filed within 3 years of the date of an overpayment. So does that statute of limitations apply?
Hold off. Let's finish public comment.
Again, one of the districts, I'm here representing two districts, Cobb Area County Water District and the Adams Springs Water District, which was dissolved in 2018. So if we're inheriting their debt, I believe that 3-year statute of limitations would apply there as well. I just looked this up because I came here prepared to talk teeter. And apparently this is not to do with teeter, because teeter says that you can't go retro, but if the county were to overpay through teeter, they could then collect in the future any overpayment. That's all I have.
Thank you. Next.
Good afternoon, Chair Rasmussen, board members. Alan Floro, City Manager, Clear Lake. To be honest, listening to the discussion, I'm not really sure where to start at this point. It would be ideal to be able to have a discussion about some of these things. I would say that there's a number of things I've heard that, the city certainly disagrees with. I think the most important thing that should be raised that is a real failure here is the communication about this issue. It's been raised a couple of times, but the way we all found out about this, I think really is just unacceptable. I don't believe, with what I understand, that teeter can be removed from this discussion. I think it came out in some of the answers today that teeter was part of the overpayments. It was used as a funding source for the overpayments. I heard two different things, so I'm not sure which one is right, but based on the agenda item and the sample letter or memo to be sent to the city of Clear Lake notifying us of a reduction, it says the first payment will be withheld from the December 2026 teeter distribution. And so it feels like I'm hearing two different stories. I think teeter is involved here. There are a few exceptions in the Revenue and Taxation Code that allow a clawback from teeter. I understand that. I adamantly disagree that this is one of those. And there's a lot of talk about low value ordinance, all these things. The problem here is the county has a software that cannot calculate a deficit sale. And I don't understand how that's okay. I understand that there's a lot of work that I don't understand that goes into the background of both the tax auction and these calculations. But we're talking about a few hundred deficit sales, it sounds like. We got Excel spreadsheets, we got 10-key calculators. There has to be a way to calculate this instead of giving us the money and then years later withholding our teeter funds, our regular distribution. And just a point of clarity on this, we're being notified that we're subject to over $200,000 being withheld. In asking questions about this, I found out that we already have had $306,000 withheld from our teeter distribution, which I don't think was legal or appropriate. And the tax loss reserve fund, from what I understand, is specifically made to help deal with this problem. I found a PowerPoint presentation that was given to this board by the former auditor controller about the teeter plan, and there's a slide on there that says the tax loss reserve fund is to handle deficit sale issues. I still haven't had an answer to the question that we posed last week related to the Revenue and Taxation Code, but we have to do better than this.
Thank you. Do we have anyone else in the room?
Good afternoon, Board Chair and Board of Supervisors. I'm Conrad Colbrandt with the Redbud Healthcare District. I'm the General Manager there. We had no idea this was even going on. There's been absolutely no communication with our healthcare district until I heard about it from Alan last Wednesday. To have this coming down the pike with no communication and no transparency, and it's like Frank from the Water District said, how do we know this isn't going to happen again? How do we know? I mean, maybe you're going to do 1,000 tax sales this year, or 500, or who knows how many. How long is it going to take to work that through? Clearly, this county needs to get new software. Period. End stop. It takes a lot of time, but when you go in for a tax sale, every single thing has to be automized so that you get that starting bid number. And so we know that's been done, and we know the dollars coming in. I'm hearing it takes a long time to figure that out, but it shouldn't. And it's not fair to the districts. We're the healthcare district. We're not going to be impacted too badly. I think we have about $13,000, so divide that by 3, $4,300 a year. It's not going to kill us. But when you're talking fire districts, the city, I mean, first responders getting whacked with over $100,000 a year, I mean, and they're trying to buy fire trucks and ambulances and everything else. I mean, the whole idea of the teeter was to balance it out, let it be smooth. Even if you just paid the 1% and kept back the other, and then until you actually figured it out. I don't know if you can do that, but your computers have to do something better. It's really difficult. And a lot of it, even though we're not going to be directly affected tax-wise so much, because I'm hoping that appreciation on properties will go up, and so it'll kind of wash. Maybe we'll still get a little bit extra. But some of these special districts, like the fire departments, the schools, the hospitals, they come back to us, the city. They come back to us and say, hey, healthcare district, can you help us backfill? We need to buy a new fire truck. Can you help us with $200,000 for that? Or, we want to buy these portable hydrants that can be used all over the county, that they can pump water out really fast and fill up a water tender in 3 or 4 minutes. And so that comes back to us. So we are affected, even though we're not directly affected. We're going to have more and more asks coming our direction. So, basically, if this is going to keep going down the road, you need to spend the money for the software and do it right, because it's not fair. And we'd really like to see better transportation and better transparency and better communication, because so far we've had none. We've had none from the County of Lake. Thank you.
Thank you.
Hi, good afternoon, Board. Diana Mann, General Manager, Clear Lake Oaks County Water. I'd just like to echo what's being said already. Nobody even knew about this happening. It sounds like it's been in the making for quite a while that you guys have been talking about this. And the only way we found out was through Alan, which makes me question why Alan was known about it. None of us were. So I guess that's for a different conversation. But again, $35,000 to Clear Lake Oaks doesn't sound like a lot when I looked at the fire departments of $200,000 and plus. But we are so small, and we depend on every penny. When we make a mistake, we eat that mistake. We don't go back to our customers and say, oh, sorry, we forgot to bill you for the 5 years. Now you owe us X amount of dollars. So my question is, maybe echoing EJ, is there another fund out there that Lake County or you guys can dip into to offset the burden that's going to be put on all of our special districts and fire departments and healthcare facilities, because we can't even make our bills right now sometimes. And so when our customers don't pay us, what do we pay with? And now we have the county taking money back from us. We're getting it by both ends. My little district's carrying over $400,000 of delinquent payments. And yet we still have to pay all of our bills and meet every one of our payrolls and pay all of our insurances. But then the County of Lake says, oh, sorry, I made a mistake. I think you guys need to be a little bit more responsible for your mistakes. Thank you.
Thank you.
Good afternoon. Been a long time since I had to get up before Board of Supervisors, but my comments are, when this cheater plan started, I was one of the initial ones that got into this with the county. At that time, it was Betty Emmons. I don't know if anybody ever remembers her, but we went into this with the assumption with her that we would get our tax base and the cheater plan when they sold off the delinquent properties, would go into a fund to help pay for those taxes that weren't paid up until. The other thing is those delinquent properties that we've got on the North Shore, and we've got a lot of them, like the city of Clear Lake has. They're paper subdivisions. They've been sitting on those for years and not getting rid of them. As EJ knows, there's a couple of places down the street from me, 2 doors down. The property owners have been dead for 40 years, no living relatives, and they just keep adding the taxes onto it. Now the taxes are probably worth more than the property is. They're probably over $40,000 in taxes. You know, and you sell it off for 10 or 15,000 to somebody, and then you're losing that money. Why aren't those places sold off when the 5 years is up? Is it 5 years? Put them up for lien sale. And then they're talking about only selling off 5 or 6 of them a year. Those things need to be sold off as soon as they come up, instead of sitting on them, because you're just tacking taxes on top of taxes on top of taxes. You're not getting anywhere. Now we're in a big rut here. The fire departments, and I can speak for them, I think, some of them, you take $50,000 or $100,000 away from us, that's a fire engine down payment. Those things cost anywhere from $500,000 to $600,000 now to replace. And our fleets are really old, most all of them. And like he said, we have to go out and borrow money, or, you know, hope somebody will donate money. Every time you take it away, we got to pay them like everybody else. We got to pay employees and everybody. I just wish the Board of Supervisors really take this under consideration before they make a decision about this. Thank you. No, James Burton.
Thank you. Do we have anyone else in the room who wishes to speak? Not seeing anyone online, Johanna? No hands. I'm going to bring it back to the board. Our auditor, tax collector, do you have any information to offer on some of these questions that came up?
Let's see. The one thing I just want to say is I apologize for the language I used about withholding from Teeter. My intention was to make it easier. Otherwise, we have to bill, you have to budget for it, because the Teeter distribution does incrementally increase a little each year. The reasoning behind saying it that way was to try to mitigate the budgetary impact. So I take full responsibility. I apologize for miscommunicating and saying withholding from Teeter. The negative apportionment will come directly from the account where the direct charge is mapped to, and we will not be withholding from Teeter. And again, my bad.
I was just going to speak generally to some of the points that were raised, especially those that relate to the tax sale, because I think there's just important background for everyone to have. You know, I do understand the frustration about why these properties don't sell. And I think one commentator noted, why don't we sell them after the 5-year mark? Just so we're aware, I mean, without even really getting into the paper subdivisions, all those lots in the hills above Nice and Lucerne, 78% of the properties in one of our auctions receive no bids. You know, no one will buy them. The only way to sell them, and if we had to go through and sell all the paper subdivision lots, would be to crash that price down, which will lead to the biggest deficits we have seen yet. So, I mean, as much as it sounds like an easy solution to sell them, it really doesn't work for us. In the meantime, districts continue to add direct charges to lots that are upside down, where already the tax burden and the direct charges vastly exceeds the value of the property. So yeah, the problem does compound. And I think the issue that we have, again, not to take it back to the low value lots, but we sort of stand alone in this, that other jurisdictions don't tax these. They don't take them to auction. They don't put direct charges on them. And there's even a difference between the direct charges that are in here. I mean, some of these, when you look at schools, for instance, that's based on valuation. So they recover that in their bond rate. You know, I understand some water districts, you know, may be able to recover it in future rates, but I think we had someone point out that they only do a rate study, it sounded like every 5 years. But there are some on here that are liens that don't have the opportunity to be recovered at all. And so I think what's important too when districts look at this is when notices go out about the tax sales and what properties are going to be on, there are some systemic issues that I think ultimately the county, no matter what solution is ultimately come up with, won't be able to solve because none of those solutions are really going to be applicable to these low value lots. There just won't be an option that will work in the end. So I just want to highlight that I think understanding where those delinquencies come from is important. There is still delinquent secured debt that's recovered in the auctions in some cases, but especially in these areas where the level of delinquency is high, it's not going to be a meaningful amount. And I just, as long as we have the systemic issue, as much as we can try to find mechanisms that may speed up processes here, there's not really a great resolution. It was pointed out software. I just wanted to highlight there is no software, at least as it stands now in California, property tax software that does this. Megabyte's actually one of the better ones because we were able to get software that helps on the front end. Really more benefits my office, frankly. But the software we have is one of the more sophisticated ones. And again, I just don't know that there's a market to get somebody to do different software because our problem's unique.
I was just going to jump in on the software. So going back to the point I made earlier is Megabyte is, I think it's 33 or 35 counties out of the 58. It is the prevailing software for California. There is pretty much like no other, unless you're one of the big eights that you're building a system on your own and it's millions of dollars just to develop from scratch. And to let everybody also understand, the public especially, is this software covers all the property tax processing in my office, so 65,000 basic parcels, plus all the other stuff we do. Then a whole chunk of what the tax collector does on the tax collector side, and then everything to do with direct charges and property tax on the auditor side. So this is what we're talking about is a very small piece of all the things Megabyte does not to defend Megabyte. It really needs a module is what we really would like to see from Megabyte, is something that fixes that process. The other point I wanted to make was going back to kind of generally accepted accounting principles is just because, to kind of defend Genevieve for a second, is just because things were paid out of teeter, it does not, accounting rules and accounting concepts don't allow that to change the nature of the funds. If the funds were not what is in teeter, in this case, the 1% property tax, because that's actually tax, everything else is a direct charge. So if it's not property tax, but she used the mechanism just to go through that account, it does not mean it's teeter. It does not change the nature of that account or funds. That's a basic finance kind of accounting rule. And so where it looks confusing, and it is confusing because we're talking about a lot of steps and a lot of processes, it's kind of clear to make sure we say that is not just because something goes through teeter and she just happened to choose teeter because historically that was the way it was done, and she'll change it in the future. It does not mean it was teeter related.
Well, and to add to that, thank you, that part of it was covered by teeter. And so, to some of the comments like, well, why didn't you just pay the 1% and not the directs? If that were possible, I promise you, we wouldn't have spent all the time we did. It takes a lot of calculation to figure out how much was paid and how it's prorated against all the charges that are there. And it's one property at a time. It all comes down to exactly how much was owed, the codes that govern each of those codes, and then again, how much was paid. And so there was no fast way to do that. And so something I do want to point out too is, deficits, yes, they occur. It's normal, like a couple here or there. It's something I don't know that we want to have a whole big process around. We lose a lot of money when there are deficits. So that means that we're selling a property at less than what it's valued. So that should be sort of I don't know, a rare occurrence, not something that we have all the time. I don't believe we want to plan for that. So it's just something to think about. And to point out, I'm not defending Megabyte. There is a module that is supposed to help with deficit sales, and it doesn't work. But because this is such a rare problem, we don't have a lot of county support to force them to make it work, because we're kind of alone in this. So
I would just add that, yeah, they do offer a tax sale module, but because our situation's different, they don't account for deficits. You know, question's been raised, but at this time, I don't see that happening.
All right, Supervisor Sabatier.
Yeah, there was a comment, and also looking for, and I know that it's kind of a awkward situation because I'm looking at 3 elected officials, so our consensus can either be followed or completely ignored. But I'd like to get consensus from the board that we would like to find out what are the options to shorten this timeline, to make sure that we can try and not create this weirdness that is part of this conversation, because I really think it's important to try and fix the future while also talking about the past. And I'd love to know if the board is in concurrence that we do want to hear some options and have that come back to us so we can see how we can support our financial team by having the tools they need to continue to have healthy relationships and not these weird situations where it feels like there's some antagonism going on between us, and that's not what I want, and I want to support that, and just looking to see if there is consensus for that.
Supervisor Pyska.
Well, I want, do you have, like, what does the future look like right now?
well,
We've got some fixes in place. We've got an ordinance that we're not talking about right now, but
I mean, I know I have 36 more that we were just notified, so we're going to be working through 36 more deficits. I don't know what else is, so that's where I don't know what else is coming. I know without as long as the low value bills go out with an undefined amount of charges that can be added, I do believe that this will still be a problem for the future. We learned a lot through the process. I believe we'll be able to do them a little faster, but it's the volume is what it comes down to. If there are 5, we can absorb it. I believe we'd be able to take the chart, do the calculations, and wait to distribute until we know exactly how much we should be distributing. When there were, we didn't have that opportunity when we were hit with 200 and so forth. You can't tell. And again, we also don't want to hold on to the good money that we should be distributing for this undetermined amount of time it took us to calculate. And so going forward, all I can really say is it depends on the volume. If it is a reasonable volume, I imagine this will go pretty fast and that we would be able to do the calculations before the distribution. If I'm hit with 200, I can't say. I guess we would have to discuss, would I hold all the good money for as long as it takes to calculate, or do we beef up the staffing? It is something that I've considered if we don't have a long-term fix for this. My office isn't staffed to do all these deficit calculations. So we've been trying to absorb it in the hopes that we have this wholesale county fix that would stop it from happening in the future. So that's the best answer I can give right now. So.
I would just also add, if you think about the whole inventory, last I looked, I think there's about 3,500 properties or so that are under 5,000 that are eligible for the auction now. I would anticipate that all of those, if we were to list them with the intent to sell them, would have to be sold at a steep discount. They would all likely be deficit sales. So that's, I think to answer your question, it kind of depends on which way we ultimately go in this. As long as we're trying to keep these on the roll, which I know is something the city has wanted. I think it's helpful for the fire districts because it allows us to continue to do the direct billing for them. To try to satisfy these other requests, they're staying on. But all roads one day lead to a deficit sale on every single one of them. So that's one of the trade-offs. Like in trying to satisfy some of these requests at the moment, ultimately we're headed for a deficit unless we take some other dramatic action, deficit, discharge, the ordinance we're not talking about, things like that.
I was just going to ask one last time, our tax loss reserve fund, we have one, in place, or, right? And so what can we look at possibly if things, like when we look further into anything, if that's a way to absorb, or?
Well, it did absorb the 1%.
Mhm.
So if you're asking for it to absorb beyond what the county has approved, that the county would have to.
So my understanding on that is we'd have to change the law that was implemented in 1996.
And I don't know
To-
if that would be retro.
I'm just.
Yeah,
interrupting
that
you
would
now.
be-
It'd be now, yeah.
That would be correct. You would, I mean, my understanding is that you'd have to change that. And then there's different calculations for that teeter portion, either 1% of the total roll or 25% of the delinquency. Direct charges aren't baked into that number right now. So the amount that lives in the teeter fund is only based off the 1%. The board would have to pass that resolution. We'd have to restructure the fund. That's pretty rare that counties do that because of the situations we're talking about right now, especially if you didn't have a low value ordinance. I don't know of anyone that would ever do that.
So you said there's 36 properties that you have to calculate right
The
now.
most recent sale, I believe there were
coming auction.
36.
Right, it was in the coming auction. There were 3 in the last. So I think it's,
There were 30.
maybe, I don't know.
Okay.
We'd have
I
to
was
look at
told
it.
36 were coming into my dream. So anyway, my understanding is I have 36 deficits to calculate. Well, confirming that because it just recent information.
And that's up until we have another sale. And there could be more.
And that's potentially coming up soon.
And then, do you have a number on this chart we're looking at for this 2.1 million? How many properties was that?
257.
Okay. Supervisor Sabatier?
Yeah, a couple of things were stated, and I'm wondering maybe if we can ask Mr. Guintavano to speak to it. I know I looked up revenue. I believe it was 55222.2. That one seems to be a refund of an overpayment of a fee, penalty, or interest, not an overpayment. So I think that's slightly different. But that's just my reading. But I'm wondering if you can speak to some of the comments that were made about some of the legalities of the clawback and so on and so forth.
Go ahead.
Thank you, Mr. Chair. So just generally speaking, 55222.2, yeah, it wouldn't apply in this situation, my first reading of it. As to the authority of the auditor to make what is essentially his corrections, right, to the roll, more specifically, we're looking at Revenue and Taxation Code 4832 and 4834. That's the mechanism by which corrections are made by the auditor controller.
Can I jump in here a second?
Yes.
I'm going to go back to the previous when you're asking about, or at least the way, I'll tell you how I interpret it, and I haven't done any homework on this, but if the teeter is only the taxes, right? Not, you have to always think about the tax bill as two sides, direct charges and then the tax, the 1% on the top, right? So if the teeter only represents the 1% and you've got a deficit of a couple $1 million, but it doesn't represent the direct charges, you can't go back to that 1%. You would have to almost do some kind of other payment mechanism to get it whole. You could start from this point, like she's described and Patrick's described, of changing the nature of that to include direct charges so that anytime this happens in the future, you could then have the nature to go back per kind of like we talked about the matching principle. It's the nature of that fund. You can go back to direct charges. You can go back to the 1%, property tax. But at this point, the nature of those funds is only the property tax. So you can't go back to that fund. My understanding is, and it's kind of backed up by generally accepted accounting principles, is you wouldn't be able to go back to that fund and try and glean or make whole the direct charges because it doesn't have it in there. It doesn't possess the nature of that. So you'll have to make it whole in some other way. Either you guys do some budget measure, some other variation where you say we're going to cover this, but it won't be coming out of the teeter, is my understanding is.
Does direct
That about
charges
right?
include penalties and interest?
I'll let-
Direct charges contain penalties and interest, or is that?
No, it's added on top of. It's part of the calculation. So penalties and interest will accrue on the whole amount owed. So direct charge is a flat rate that is put on by the agency. The 1% is what is dependent on the actual value of the property. Everything else is just flat charges added on top.
Okay.
Well, and that was my understanding of what Mr. Ford was just speaking, that if we wanted to do something with this, it would have to be another fund. It can't, like, we can't override and say that we're just going to forgive this. That's my understanding of the law.
You could probably forgive it, but you're going to have to do some budget.
Well, that's what I mean. It would have to come out of a different
Yeah.
budget, is my understanding. Supervisor Sabatier?
And while I empathize with the agencies, I think forgiveness creates a weird precedent of, I'm going to go back. I didn't hear concurrence. Is there a denial of concurrence to ask for how to solve this in the future? Because what I heard was, we'll see. And that's not an answer to me. If you're saying, I'm going to try to have an MOU with all these agencies that I can have a year to figure out this format so I can pay them, and we've approved that I don't give you the money until we're done, that would be one potential solution. I don't know. But like, I don't want to put you on the spot for options, but I think we need to talk about how to fix this in the future, because this is not just paper parcels. A piece of property on Highway 20, which crosses both District 2 and District 3, sold at it's a $700,000 property. It sold for $170,000 as a deficit sale. It was an old mine. So, I mean, it's not just paper parcels, it's other pieces of properties. We're gonna have to figure out how to make sure that we can do this without having the negative impact to all the parties, and what's the best solutions. And I still haven't heard concurrence, and unless I hear denial, I'm going to keep asking, is there concurrence to ask for options?
Yes, from me, I don't.
I will be asking for more staffing. If the county doesn't have, doesn't come up with a solution to prevent this, the numerous deficit sales, I will just need to ask for the staffing to make sure the work can be done timely while keeping up with our other deadlines.
Well, I don't know the answer to it at this point, but yes, I don't want this situation to happen again. We got to figure this out, but I don't want to be here next year when we paid out more than we should have. So
The only
there's
thing
work-
that I could think, sorry, I did not mean to. cut
no,
you
it's
off,
okay.
But I do want to just, I mean, the potential for an additional year in the repayment, I mean, that is something I think as a county, I mean, because I did hear a 5-year budget cycle and so forth. So that would be something that I would think that could be within our control to do if it's something we wanted to look at. But I mean, outside of that, I have no.
And I intended to pose that question too. Was there a possibility for 4 or 5 years? So I hadn't got to that yet, but hopefully did that answer your consensus?
Yeah, thank you.
And we have somebody that wants to speak again. You're wanting to speak again, City
If
Manager?
I could just have like 20 seconds.
Okay, go ahead.
Thank you, Chair. I know you don't have to let me, but so after I sat down, so again, there's 216,000 or whatever that's proposed to be withheld. 306,000, a little bit over, was already withheld from us. Now, we heard from the auditor that this is not the future withholding, however that works out, is not going to be the 1%, if I understand correctly. But it was on this last one.
That's for
This is the list of all of them, at least the property tax receiving agencies, the 1%. So I'm wondering how that's going to be resolved.
Ms. Harrington?
I don't understand. Can I get clarification on the question?
Yeah,
What-
City Manager, can you try to clarify that a
And
little
I do
more?
want to address the amounts that were withheld prior, but I do want to know.
Well, my understanding of the discussion is that you're not going to withhold teeter payments. Our 1% distribution is not going to be withheld to claw back the 216,000. There's going to be another mechanism used. Is that incorrect?
sorry, with those terms, I'm not clear. What I can say is that the 1% is covered by teeter. So in the event that the property sells for less than what the 1% is, we will not be clawing back that difference. The teeter will cover that. And some of the properties sold at less than even the 1%. And so it's only in the event that, we pay direct charges, and if they were not paid, that is the portion that is being recovered. And so the 1% is covered by the teeter, but I'm not sure when you say withheld.
Well, I don't have the memo, but the proposed memo that you sent said that it was going to be withheld from our 1% distribution. And then later you said that that was incorrect language.
So I erroneously said it would be withheld from teeter. And so that's where I did.
So you still intend to withhold it from our 1% ad valorem property tax?
Align it with the distribution so that there's no cash flow issues for some of the districts that don't have the money at the other.
Okay, I just don't know what that means, I guess.
So what it means is April and December are when we distribute the teeter, and so I was planning to have the repayments align with the April and December teeter distributions, just to make sure that.
I just hope there's a way to have a productive discussion about this at some point.
Okay. Do we have anything further from the board?
Should I address the amounts that were withheld prior?
Yes.
Okay, so now I'm going off the top of my head. So 2021, I came to the county in 2021. So we had just received the first 6 deficits, and then there were 26 shortly after. And it took us, I want to say, about 6 months or so at the time. I was working with my predecessor and the prior property tax coordinator, and we did do the distribution, and then they recovered the amounts. And I wanted to say it was within about 6 months from the time it was just distributed to when it was recovered. And so that was back 2021, 2022, and those original deficit sales, that is the amount that he's speaking about. And so, yes, we had distributed and a journal was, and recovered certain amounts.
Supervisor Sabatier.
Yeah, just a quick question. So, number 162, which is what, tax sale number 162, which is what we're looking at to 2000, that we're looking at for the totals that have been put together. That's from 2023.
160 to 162. There's 3 tax sales, I believe, but yeah.
Am I incorrect that it is, at 162, is that on, in 2024 or 2023 that tax sale 162 occurred? I believe it's 2024.
Yeah, it's hard to say. They last so long, roughly.
I'd have to verify.
What I'm asking is there another one that will have this same impact from 2025 that has yet to be completed? And so it's more than just a number we're talking about, because all the way to 162 is only the year 2024, and we've had another one plus another one about to happen in a few months.
3 sales, 36,000 is that? Yes. Okay. So yeah. Yes.
Yeah, so I don't really want to get into numbers too much because that's not part of the presentation. They didn't prepare it, so I don't want to commit to anything. But I know more recent sale was much smaller. It was, I think the ultimate number of deficit parcels was 3 with, like 36,000 or so. So it's a much smaller amount. But that is unusual. I would expect them to trend upwards again sharply in the future.
Okay, thank you.
Anything further? Go ahead, County Council.
Thank you, Mr. Chair. Just briefly, just to confirm with your chair and your board that public comment on this item has now been closed?
Yes, it has. Not sure if Supervisor Swati still has anything.
I just found 163, and that was from 2025. And I think it had about 525 properties total, and I don't know or 434 properties total. So much smaller, and I don't know what was pulled out, and what was sold, because that makes a difference.
So is there anything, this is a presentation at this point?
So, I guess the 3-year repayment is what I've proposed. Depending on what else is happening, I don't know if we want to entertain a longer repayment.
Well, that question was posed by the board. I don't know if we have consensus. I see two of us
I
for a
believe.
possible longer plan.
Did we ask for, we kind of talked about 4, potentially 5. And I would say I want to give you that flexibility to work with each individual entity to figure out, I mean, hopefully it's as simple as just an email. And if it's more complicated, then I think that's just,
Well, it's like 30 emails and then 30 individual conversations about the tax.
I think it takes time to clean up some history.
Right.
It is, again, just the burden that we all have to deal with is our past supervisors and our past administrators and our past have created the issues that we have to deal with, and hopefully this will get cleaned up, and then afterwards we'll never have to do this again.
But I would like to have everyone on the same payment plan if somebody wanted to repay sooner, but
Then
instead of
let's make
having
it-
2 years, 3,
then let's
instead of
make
trying
it
to
5.
manage, because we're not collections. So if there's consensus,
Yeah.
then I will rework this with a 5-year repayment plan.
Yeah, you just got
Still
it.
aligning it with April and December, just for unknown reasons. And then we would just move forward, and I would go ahead and send out the communication. I will fix my language. I didn't want to change the language from one week to the next, so I left my error in there. But I'll fix it before it's actually sent out. And then if I'm good with that plan, I just want consensus. It's a little bit outside of,
Well, we have consensus on that item. And then there was a previous consensus that I think you heard.
Yeah.
Okay. So is there anything further you need clarification on from this board at this time?
No, I don't think so.
Not hearing any, then I'm going to go ahead and close this item.